everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, one of the partners over here at Dominion. We're a specialty tax and accounting firm specifically for the wealth management industry. On today's episode, I have a returning guest and personal favorite of mine, Shelby Nicholl. She's a 25-year corporate vet turned entrepreneur. She grew up inside the largest broker-dealers, including Edward Jones and LPL, and now she helps advisors with transformation, helping them move practices, go independent, starting their own RIAs, and just getting them into that new phase of life. So thanks for joining me today, Shelby.
Oh, thanks so much for having me. I love coming back to this group. So thank you.
And we were talking a little bit in the pre-show about just things that you've been seeing in the industry, because we're in a time of a lot of flux when it comes to what's going on with some of the consolidations and what you've been seeing on the ground. So I think maybe starting off the conversation here with what are some of the things that you've been seeing and trends kind of at that 30,000 foot view in the industry that you've seen kind of trickle down into individual practices as we're getting.
Yeah, I think of three things when I think about the trends and what I'm seeing right now. So number one, we continue to see consolidation in the industry. You know, we had a couple of really big deals that were announced this past year with Commonwealth being purchased by LPL. That was a huge deal, right? And that one really set in motion just a ton of advisor movement because it really said, gosh, if Commonwealth can be purchased, then any broker dealer, smaller and maybe even larger, can also be up for grabs. And gosh, I, as an advisor in charge of my practice, should be, considering what's best for me and for my clients. So we continue to see consolidation, both in the broker dealer space and also in the RIA space. You can continue to see firms, any size being kind of swallowed up by the aggregators. There's very large exit values going on. And so those senior partners are often selling and sometimes selling and staying to some of these large aggregators. So consolidation is one trend we're seeing a lot. A second trend I would say is the continued movement to the RIA landscape. And I think it's a bit of an outcome from that consolidation. I think advisors, and especially entrepreneurial advisors, want to have greater freedom, flexibility, and control over their own practice, and therefore are headed into the RIA space where they can really have complete flexibility. They can have multiple custodians if they want. They can choose their own tech. They can decide which of the buttons in the operations side and compliance side that they want to push and which ones they don't. And it's just a continued sort of one-way street, if you will, to the RIA side of the world. And then the third trend that I see, and perhaps that you see too, Catherine, is just a complete and total interest in adding on additional services to the advisor practice that broadens that advisor's impact to their clients. I see a ton of focus on tax, that being tax advice, tax planning, and then tax preparation in-house. And the desire for that will often, by the way, lead people to that RIA side of the world also. So those are the three key trends I'm seeing and watching all the time.
And in terms of, because at the practice level, I've seen a lot of the same things in terms of, when people are doing these breakaways, there's a lot of administrative setup, a lot of changes that kind of come into my world of, setting up EINs and setting up bank accounts and how are you going to get taxed? And all this is going to change. I've been seeing much more interest recently with this than, I'd seen historically. And I'm just wondering, with some of these changes that you've been seeing at the industry level, when people are, maybe thinking about, is the grass greener on the other side? I can say most of the clients that we've had who have gone independent, I've not had anybody regret it so far, but I'm a small sample size. In terms of people thinking through some of these issues or the complexities involved, what are some of the common, maybe stumbling blocks or pitfalls that you've been finding kind of in your work with helping firms do this?
Yeah, I think we see a couple of them. One is, overall, it's a very large project, right?
Yeah.
So if you think about it just as a bundle of work and tasks that have to get done, the move from a broker dealer, let's even call it even like a wirehouse, right? That's going to be your hardest kind of move, is exiting a wirehouse and standing up your own RIA. That is a ton of work. And there's a lot of moving parts and pieces in there. One, you've got all the business entity stuff that you're working on with the client, with the advisor. We also have all the technology choices that have to be made. We have to choose a custody partner. We have to figure out the compliance partners, et cetera. And so I think the volume of work is just one of the big hurdles in there. And I think that's one of the places why we get involved with so many of them, is because people are coming to us and saying, hey, I don't want to make a mistake. I don't know what I don't know. You
Yeah.
speak the language, and you happen to speak broker dealer language too, because that's where I grew up. And so as a result, they come to us to kind of help smooth that out. In terms of some of the things that we see maybe missing or missteps, I think one of the things that cannot, it's almost like you can't put enough time and energy into it, is going to be around branding and messaging.
Mm,
And this is a place where, for a lot of advisors who maybe are a bit more analytical, a bit more quantitative, they may or may not feel like they can do the art side of client communications and of just writing the website content and deciding what that should look like. And that's a place that can really make or break a transition.
mm,
I like to say, and I actually, it's not my words, it's Kevin Nicholl's over at Oxley. He says, a transition is not the place to cheap out on
mm,
marketing and messaging type work, right? And I know
mhm.
I'm paraphrasing him, but we couldn't agree more. And so absolutely, that's a place we put a lot of time in. And I think that's one place that's really additive for so many advisors. We will help with contact strategy. Who are we going to call and in what order? What are we going to say to them? What are the FAQs for the entire practice, so that if anybody asks you why you were standing up the new firm, what's going to be different about it, why, the big why behind it, what you hope your impact to be, that we've got everybody using the same language.
Mhm.
We're building out the website content, maybe working in partnership with somebody like Oxley, maybe doing it internally within my team. It just depends on the needs. But that marketing and messaging place is a place that you cannot spend too much time.
Yeah, no, that's a really good point. And I think for something that I've seen just kind of in more of my wheelhouse with these, another really common scenario, and maybe we can speak about this a bit, is a lot of times when people are going independent or they're making these big structural changes, they're also doing like big equity changes at the same time. So it'll
Mhm.
be, oh, we're going to break out and then we're going to have a partnership with two partners, or we're going to try to form an S corp or whatever it is. And usually if you've got, it's not just a solo person, that introduces so much complexity when it comes to actually getting getting the plane off the
100%.
runway. So when it comes
Absolutely.
to those things, have you seen, because I think more commonly when I'm seeing people break away, it's not as I've been seeing fewer solos, but maybe that's just my slice of view of things. But what are some of the things that you've experienced kind of in those scenarios where it's like a multi-partner kind of exit?
Well, definitely when you're going to be exiting, like, a wirehouse or a larger firm or whatever, you're going to be exiting as a larger group for sure.
Hmm.
And so it's not going to be just a single advisor. We may decide that it is a single equity partner,
Hmm.
but we have to really divide the partnership and the work and the roles from the equity.
Yeah.
And we have to move our mindset from a revenue focused, split focused mindset to an equity mindset. And that shift does require it's like a right turn, right? It is a
Yeah.
new world. We have to recognize that it is a new world. And that shift can be really hard because you've arranged how you work together in the old manner, which was just splitting income. Now we're talking about equity, and you're talking about multiples that are on top of the value of your firm, and you're talking very large numbers. And so
Hmm.
it's really easy to get caught up in those very large numbers. And then for the relationship between, say, two or three partners or more, it can become very tenuous very quickly.
Yeah.
One thing that I have seen some people do when they have a larger team, but they've largely been running sort of solo businesses, but maybe officially teamed, is sometimes we'll see a structure, and you're probably even a better person to opine on this than I am, but I've seen a lot of structures where we have sort of a company that multiple people are owning, and then the income comes down into individual level
Hmm.
LLCs
Yep.
or corporations, and they sort of glide the income down that way, and that can be an effective way of sort of moderating some of that tension as well.
Catherine here. Just wanted to say thanks for tuning into the show and hope you've been enjoying it. Since we're all at the mercy of social media algorithms, if you wouldn't mind rating the podcast on whatever platform that you listen to, I'd really appreciate it. And also, if you're looking to stay in the loop on current tax updates, what the firm is working on, and just the things that I think you as a firm owner need to be aware of when it comes to the world of tax, you can sign up for our newsletter using the link below. I only send out editions when we have really useful things to share or things that I think are important to have your attention and energy on. So let's get back to the show, and thanks again for being a listener. Yeah, absolutely. Because it's a real challenge, I think. I always kind of say it's like how many layers of entities you have is like having like a joint in your arm, right? Like if we need more flexibility, we need more joints to get operational things done. It's going to end up creating another level of entities, like because that's
Yes.
just the way it's going to flow. So I see a lot of these, especially people from the broker dealer world going independent, that mindset of like performance based comp and perform, basically siloed, like your book is this, my book is that. You can still achieve a lot of what you want to achieve. It just requires like having more of like an ensemble structure where you've got that operating entity on the top, and then each of the individuals are having separate activities so that they can control things like their tax planning. It also can allow for things like unequal distributions, because if you're operating, just as like a little tax nerd thing, if you're operating as an S corp, you can't do that. But it just really depends on how the partner group sees themselves. Because
Yeah.
I have a lot of, and it's so individual to the people. Like I'll have this conversation with a firm who's thinking about making changes, or we're doing succession planning or something, and say, so how are people going to get paid? How are you as the ownership group going to get paid? Like how is that decided? And oh, it's going to be, we make what we make for our salaries, and then everything else, it'll be 50-50 because that's our equity. And it's like, okay, great. Like we can actually use just a very simple structure to achieve that. But then when people want to have more, kind of siloed activities going on, it's like, okay, well, now you've got kind of different seats of equity, really, is
Mhm.
kind of what's going on. So it just makes it a lot more complex. But a lot of it, at least in my experience, has come down to, knowing, having for the partner group or for the firm owner, just a strong sense of, well, what are you really trying to get out of this at the
Mhm.
end of the day? Like how much compensation do you want? How long do you want to be operating this activity? What's the, I always joke, the birth of a new entity, you also have to plan for the exit, right? Like how do you eventually plan to leave this? Because if you're going to need a lot more complexity, or you're going to need a certain outcome, then at the beginning we're going to plan this differently. Especially when we talk, most of the time for people, it's not, okay, we're setting up an entity for 40 years. It's like, okay, we're talking about like a 15-year window. That's not very many seasons, to be operating something before you're going to have to make another big transition once you want to exit. So um,
Yeah,
but yeah.
it's a really good point. And then I see them also having to make decisions about how do they want to work together.
Yes.
So are we running this as a single firm and everybody is jointly supporting the clients together? Or if you and I are in this practice, are you running your book of business? I'm running my book of business and we're sharing admins. Like that's a very different
Yeah.
conversation, right? And then the other thing I see where folks get a little bit tripped up in this very early kind of conversation is also not just entity structure, but it is the operating agreement. It's things like voting rights.
Yep.
And then it's also how are we going to pay for certain staff members? That can come
Mhm.
up some as well. And so if there are members that are decked to you and not decked to me, well, maybe I don't want to have to pay for your staff member or vice versa.
Mhm.
So there's a lot of just how are we going to work together? How are the clients going to be served? Are the clients of the firm? Or are the clients mine and clients yours? Those are some of the questions that when you are moving from this income based world that you used to live in with splits, et cetera, to now the RIA side where you're really thinking about your equity value in addition to your income value. There's some really hard conversations that have to happen there.
Yeah, and a lot of potential for misalignment.
Yes, yes,
Yeah.
yes. Yes, I definitely have seen some misalignment. I think that, if you are the let's call it the senior partner in a group, like we need to be really careful about how do we set up the entity, and then how do we set up even the ask of folks to join, et cetera.
Mhm.
That's been something that we've seen come up and be difficult.
Yeah. And so we've been talking about all the problems, but
Yeah.
what are the wins? Maybe
Oh
some
gosh.
anecdotal
So
things
many
to put people on.
wins, right?
You can get over the admin hurdle.
Yeah, yeah, we can definitely get over the admin and the operational hurdles for sure. And that is, I'm glad you said that too, because one of the things also I want to mention is that when we're working with clients at Muriel Consulting, we are figuring out what elements you need as an advisor if you're going to go RIA. And so one of the things that we've done that I think has just been a huge win in this year is we have partnered with an operations firm that does back office operations for practices nationwide.
Oh, that's great.
And what we do is we bring them in for usually around 4, 5, 6 months, and they are running next to your team. And so by doing that, we are able to train your team on how to operate as an RIA, because that's often new, how to do the simple activities that you haven't had to do ever before, how to do things like fee billing and how to do billing reconciliation. They can also be kind of a frontline support desk for your team in those early days on working with different custodians, working with different technology, et cetera. I just think that has been such a huge win for our clients. Really, really proud of that advancement that they have. The other thing that I would say is a big win for all practices sort of going towards the RIA side is true freedom flexibility aspect. You suddenly have access to any technology out there that you want. And so we are absolutely seeing a lot more sort of trial and error around, and I should maybe just say trial of new and different technologies. And we're seeing compliance technology get better too.
Mhm.
So I have one client that used Archive Intel this year. And I'll tell you, that app for compliant texting is gorgeous. It
Mm.
just uses your iMessage. If you're on the iPhone, you go into their app, you select who it is in your set that is business contacts, and it automatically will, retain that information, send it into your compliance system, et cetera. I mean, it's
Wow.
just gorgeous. And there's a couple of options for that. So things like that are big wins, tiny, detailed, but big wins.
I love things like that though, just finding those efficiencies.
Yeah,
It just really makes, yeah. Because I think, when I talk to the firms that, and on the flip side too, and maybe we should reflect on this a little more as well, is that for some people going independent really is not the right answer.
right.
And it can be, the grass greener on the other side. But then when you really look at your situation and your goals and what you're trying to get out of the practice and what you're trying to do, going independent isn't the answer. I think for kind of helping people think through some of that component of things, um, when you help people kind of work through this at a very high level, what would be some of the reasons that it's not a good idea to go independent?
Yeah. So one of the first things we're going to talk about is build versus join. Right.
Hmm.
So I believe if you've got a piece of paper and you can put it into, 4 quadrants, let's call it. On one side, on say the rows are going to be captive and independent. And at the top, you can put BD on the left side and RIA on the right.
Hmm.
And you kind of end up with this 2 by 2 matrix, right? Because you can be in an RIA and be completely captive, and you can
Hmm.
be in an RIA and be independent, right? And
Hmm.
that is just because of what is your personal kind of relationship to the entity that you're part of. So the first thing that we're going to talk about is like, where do we really want to fall? And most of the clients that we're working with want to fall in independence of some sort. They're
Hmm.
either going to be independent broker dealer or they're going to be independent RIA, and they want to own their practice. They want to own their clients fully. They want to own their data, that type of thing.
Hmm.
Then the question is, okay, do I have product line, et cetera, that it is best to also have a BD relationship? Does that need to be a friendly BD, or do I really want to be in the independent broker dealer space, in the LPLs, the Raymond Jameses, the
Hmm.
Ceteras, et cetera? Or do I want to be on the RIA side of the world primarily? So one of the first things that we do is, if the RIA side of the world is the right side, and often it is, because people are wanting to have greater flexibility in marketing, et cetera, then the conversation for RIA becomes build or join. You do
Mhm.
not have to build from scratch to move to the RIA side of the world. There are these amazing RIA platforms out there that you can join. You can still own your book of business, own your practice, but benefit from their compliance, their technology, et cetera. And so we're going to do a build versus join analysis. And that
Mhm.
build versus join analysis is just the starting point where we talk about those options. When I think about who should build versus who should join, one of the things that I talk with our clients about is what are the buttons that you want to push and which
Mhm.
ones don't you want to push?
Yeah.
And this is really a conversation also even for going independent versus being a W-2 advisor too, right? I worked with
Yeah.
an advisor earlier this year who missed payroll with his team, right? He
Mhm.
never should have been pushing the buttons on payroll. And so we need to understand which buttons do you want to push and which ones don't you want to push, which ones are you fearful of, et cetera. And that will guide us
Mhm.
towards the decision of build or join.
And with, maybe a couple of like anecdotal and, pieces of advice here. Do you see that it tends to be like a combination of personality plus acumen, or, stage of life in the practice, or, team size? Like, what do you see as the things that are the most driving for some of those decisions?
100% team size is a huge piece of it.
Hmm.
It is how advanced is your team? What are the variations in skill set on the team? The larger the team is, the more likely you can go ahead and go all the way to building your own RIA. It's
Hmm.
not exclusively. There are definitely kind of smaller groups, ones in two-person shops that are going all the way to build their own RIA. Well, those folks have a lot of discipline about pushing all the buttons, and they have
Hmm.
a very high desire for complete control and flexibility and freedom. They do not want to be philosophically under anybody else's domain ever again, right? And so they have
Hmm.
that really strong belief system. For others, it really comes down to staff.
Hmm.
And so, one of the first things that we're going to ask about if you're interested in building your own RIA is, do you tell us about your staff? Tell us about the roles that you have. How have you divided the responsibilities of the practice against those roles? Does anyone have a natural inclination towards, being a little bit more compliance minded, as an example? Most of the time, we're going to outsource most of the compliance work, but we still want to have some of that skill set inside of the practice or some of that discipline inside of the practice also.
And I guess maybe for us to kind of circle to, um, firms who have made the choice, jumped in, implemented the changes, at what kind of time frame does it usually take for people to hit like cruising altitude after they've made a change?
Oh, after they made a change, probably about 3 to 5 months. And it's going
Yeah.
to depend on how hard was that change. Were you a broker protocol change or not? Did you have your client data or not? Right. I've had advisors who in 10 days had 70, 80% of the assets over at the new custodian and were
Hmm.
operating as their new RIA. They were ready to do fee billing, et cetera, 10 days in. I mean,
Hmm.
absolutely incredible swift changeover.
Hmm.
For others, when you are, a non-protocol move, it's going
Hmm.
to take you longer to get your clients onboarded. The amount of change and newness for you and your team is huge.
Yeah.
You're learning all new systems, all new technology, et cetera. And in that case, it's going to take you 3 to 5 months to hit cruising altitude. For somebody that's coming from Schwab to Schwab, you're at cruising altitude in a month.
Yeah. Yeah. That's great. Yeah. Cause I was talking to an advisor recently who's, you know, was an RIA, then, went backwards, and then is going to come back again. And, we were talking through some of that, and it's like, oh, she's going, Schwab to Schwab, like that's going to be a much easier lift than, what I've seen some other people go through, where it's like all of the sudden, something gets held back, or, just some of the issues that can come up. In terms of, mitigating some of the problems that people face, what are some of the things that they should be the most, cognizant about, or the most time intensive, or just the biggest like surprises that you see, firms, if they're not working with you, kind of a thing, can tend to hit?
Yeah, so I think a couple things. One is you really can't master something that you're only doing once or twice in your career.
That's true.
Right? It's really, really hard. And so, first of all, the best advice is just don't go it alone. Find someone, it doesn't have to be us, but find someone who has gone this journey before you, learn everything that you can from them, follow their path, etc. Or engage with a group like ours so that we can help you through it. When we think about the surprises and where we see the kind of points of problem, it is in that transition. It's in those first several days. It's going to be bumpy and it's going to be emotional and you're going to have a lot of anxiety. And what I most see, and this is, advisors who work with us and advisors who don't, what we most see is just very high anxiety levels getting the best of people.
Hmm.
Tempers get short, emotions run high, and now suddenly I'm saying things I didn't mean to say. I
Hmm.
am cutting corners I didn't want to cut. And it's creating a world where then there's more cleanup later.
Yeah.
So the first thing that we do on those days when we're on site with our clients when they're making a move is we are managing everybody's emotions and we're setting expectations that, hey, this is going to happen and then this is going to happen. It's going to be a few hours between when you resign and when you get to start calling clients. In the meantime, let's have a welcome meeting with your team. Let's make sure we handle these 5 topics. Let's get everybody excited about the future. Let's hand out the hats. Let's do a few of these rah things so that we all feel connected and ready for the work that is ahead of us.
Hmm.
Those types of little adjustments and changes and that emotional sort of regulation really defines and creates the success for the long term. The moves where we can stay calm, the moves where we keep the anxiety down and the fun high, those are the moves that go the fastest. They're the most successful. They're where clients can feel your enthusiasm and where you also know your story inside and out so that you can tell that to your clients and people are just thrilled to come along with you.
Yeah, that's awesome. So for people that are interested in what you do, Shelby, can you give us some more background in the firms that your company works with, and some of the role that you play, and how they can kind of get more into your world?
Yeah, so we do really 3 things for advisors. We help advisors move firms, select where to move their businesses to, and help them kind of match make that. We help advisors build RIAs from scratch, and obviously that's been a big part of what we've been talking about today. And we help them also hire staff, especially servicing advisors, paraplanners, those types of roles. In the RIA build space, that's really we're spending more and more time there. So, talk about that trend that we talked about at the top of the conversation. We're spending more and more time there. We've recently launched what we call our RIA Launch Accelerator program, and it really is a comprehensive project management, strategic coaching, technology design type of an experience where we really help advisors build the plane, get it into the air, get it to altitude, flying well, and then we're going to turn it over and you're going to take it from there and you're going to be ready to do so. And so that's really our mission. And to engage with us, you can go to murielconsulting.com, MURIEL consulting.com. We also have a quiz out there called Is My Business RIA Ready? And so take the assessment, take the little quiz and engage with us. You can, book a meeting with me and others, and we'd be happy to chat with you about what we do with our clients, but also just more broadly, what should you do with your business and give you any perspective that we can offer. Our promise is always no pitch, just perspective, and we don't do cold calling, so we're not contributing to that world. So make sure you book with us.
Yeah, that's wonderful. So for those of you listening, we'll post the links nearby, for you to get in touch with Shelby. And I can just say from personal experience, we've worked a number of cases together, and it's been always wonderful the opportunities that we've had to collaborate when it comes to some of the transition work and just some of these complex things. I think you said it well. The one time you do this, it's going to be hard to master it. So it's really finding the right people for the right seats, depending on just how complex of what you've got going on is happening is always great. But so we'll provide those links below. I'm always interested too. Send me a DM what you thought about the episode, and I'd love to hear more if you're dipping a toe in this world or thinking about these things. I'm always interested in getting hearing your story and seeing how we can make these podcasts more useful for everybody. So, but thank you so much, Shelby, for coming on the show. Any final closing thoughts before we go?
Well, thank you for having me. And I love it when my clients are working with you because I know that they're going to have like great advice about entity structure. They're going to get the flexibility that they need. And so I also just so enjoy working with you and any of the clients that work with you because they are always thoughtful, meaningful, good people who, want to do great work for the clients. So we love that.
Yeah, no, that's wonderful. Awesome. Well, thank you so much for coming on. And for those of you listening, this is the Financial Advisors Want to Know podcast.